Heavy is the head that has to manage all of this.
Hey everyone, welcome back to my channel.
We're now incentivized to buy what we already buy.
Fumbling through college had me building.
I also got some done on the other side.
And that was right around, I would say, May, maybe, right before renewing the lease for this property.
Welcome to the channel, Martha.
Thank you for having me here.
Oh, I was going to say, I am getting up there in age, I'll tell you what.
Bills paid by other people, life was never this good. I had to step back, knowing that it's...
All right, we're finally skipping the basics levels. We're finally skipping the basics. We're not going over what you should be doing prior to investing. No, we're getting into how to supercharge your investment portfolio, how to start to really rake in that dough. We're no longer moving slow. We're starting to speed up the process. And it's because you've done all the steps in the beginning in order to get to where we are now. And you're tired of me talking to all the beginners. You're ready for intermediate role. And so let's get straight into it. So you already know, now that you have all this money and we've finished the budgeting, we've finished the debt, right? We've cleared all of that. Now that you have all this money, that passive income that you've started to grow slowly but surely, we're now going to start to break down some barriers and start to set new goals for ourselves. So today we're actually going to talk about capital gains, and we're going to talk about growth stocks, because I had some viewers reach out to me and they said, hey, you're a dividend investor, but I want more capital gains, more growth. Now, nobody wants capital gains, and I'm going to tell you why in just a minute, but some people do want growth stocks. And in some cases, capital gains might benefit you and it may not. So for example, what is capital gains? Let's get into that first. So capital gains is when you reap a profit within a period under 12 months, so less than a year. And it's a amount that is going to require you to pay about 50% of that in taxes, depending on your state and jurisdiction, of course. But this can also happen with dividend stocks as well. So it's not just growth stocks that have this penalty of sorts. However, you tend to see this more with day traders and growth stocks. Why is that? Because let's use Bitcoin as an example. You put $20,000 in Bitcoin when Bitcoin is at 20,000. It goes up to $60,000. Guess how much money you have? $60,000. Do you want to keep all your money in Bitcoin when it hits $60,000? Probably not. So what do? You sell it off. You know that eventually it will be under $60,000. Even if it just goes to $50,000, you just saved yourself $10,000. You can buy back in, and when it gets to $60,000 again, you can sell off. Make sense? Yes, it makes sense. If you've been watching Bitcoin, you know it goes to 20,000, it goes to 60,000, 20,000, 60,000. And so even if it was to go up to 70,000, you probably want to spend more time out of the market at that point, because you've already had so much gains. You're willing to sell and pay taxes on those profits at a 50% rate. So what is that? $40,000. You're paying taxes on it. You're going to end up with $20,000. You still doubled your money, right? So yes, in that case, I would actually sell. I would take the capital gains hit on the appreciation, and I'm absolutely okay with that. Capital gains is essentially another tax on top of what you would have already paid had you not pulled out the money in less than a period of 12 months. There are penalties when it comes to businesses too. For example, Elon Musk would have received penalties had he not pulled shares out of Tesla. Same thing for Jeff Bezos. He would receive penalties if he decided to not pull shares out of Amazon when he is required to do so. So there are penalties in everything, and penalties mean that there's a lot of money and the government wants to share. So You want to find out how to not give the government as much. And that's going to be a super advanced class. So I'm not trying to blow your minds today. We're just going to we're just going to stick to the capital gains, and then we're going to talk more about growth stocks. So let's talk about Steve Ballmer, the owner of the Clippers. If for all of you who don't watch the NBA, the Los Angeles Clippers is the NBA basketball team. How did he amass his fortune? Well, he was an early investor in Amazon. Amazon is a growth company. They do not pay a dividend. The reason why I like dividends is because you can pay into a dividend company and they pay you every single month or every 3 months or every year for owning a share of their company. The reason why I don't like growth stocks is because although they grow faster, that's why it's called a growth stock, they tend to also need to be sold in order to reap a benefit. And I'm sorry, I don't mean tend to. I had somebody calling me, so I do apologize about that. But let me actually pick that up, and then I'm going to restart the video. So I do apologize for the interruption. I was needing to, respond back to my peoples, family first, people first. But where was I at? Steve Ballmer owns the NBA Clippers. Great dude. And, you have to sell in order to reap the benefits of what you have. You have to sell in order to really profit, right? You don't profit until you sell. Whereas in dividends, you profit as soon as that money starts to come in, along with the appreciation, along with the growth. And so there's so many ways for me. But all the billionaires love growth stocks. So what do I tell you? Follow the money. And if all the billionaires love growth stocks, then you should probably follow growth stocks. Now, I can't say all the billionaires because Warren Buffett loves dividend stocks, but he made his billions with a growth stock company, Berkshire Hathaway. Don't ever forget it. Let me make sure that Berkshire is actually still a growth stock company. Just one moment. Berkshire Hathaway stock. Got to make sure that I'm giving you guys true and accurate information at all times. Do they pay a dividend? No, they do not. All right, so yeah, they do not pay a dividend. And the reason I have to look, people, is because companies can opt in to pay a dividend just randomly. So today they may not pay a dividend, but tomorrow they may. So at the time that I'm making this video, they don't offer a dividend. Tomorrow may be a different story. So those are the things that you want to look at. Disney used to pay a dividend. Then they took away the dividend. That saved them billions of dollars. And they claimed that they were going to bring it back. That doesn't mean that they necessarily will, right? Because it's been so long since they brought dividends back to the market. So I think once you really prioritize yourself as a dividend paying company, you can't go the other way because you've built a fan base, you've built a company or a community based on the fact that you pay a dividend. So once you pay a dividend, you can't go back because there's diehards like me for dividends, and there's diehards like Amazon communities for growth. And so when you change so drastically, I mean, you're going to lose a lot more than you think. Now, all I have to say is make sure that you're evaluating these companies properly. Make sure you're looking at the top 5 strongest companies that are going to bring in the most money. The S&P 500 does the same thing. They're heavily invested into the top 5 companies, being Amazon, Tesla, Netflix, Google, Facebook, also known as Meta, and Netflix. There are some companies that I own. There's some companies that I don't. For example, I own Tesla. I also own Meta. I don't own any Amazon or Google. I should. And eventually I probably will add those to my portfolio. I need to start monitoring those, see when they're down a little bit, and start to purchase little by little. But those are growth stocks. Those are not dividend stocks. I'm fully aware of that. And I'm just trying to diversify my portfolio more, but also understand that I'm also trying to be a billionaire. So with that being said, for all you growth stock enthusiasts out there, let me know what your favorite growth stock is. It doesn't have to be in the big 3 or the big 5 or any catchy words like that. But let me know what growth stocks you've been following. A stock that doesn't pay a dividend but has been super, super good for you. Let me know in the comment section down below. Thank you and have a great day.